Hello, it is options expiration week this week. It's also the week ending with a 3-day holiday in the United States for the inauguration of the new president in a week's time. So, options expiration week, seasonally, usually the markets attempt a little bit of a bounce if they can. And I think that looking at where we are in a lot of markets, is likely what they're going to try and do. Now, obviously, we've had a really nasty shakeout in Asian trading. Often, when you get that at the US Open, the market's really fallen too far for people to sell. So, we do see a little bit of a bounce. It's Mutual Fund Monday, and that tends to be what happens. This is also one of those weeks where the VIX actually expires next week. The VIX options expire next week, not this week. And it's also because we now have options on Bitcoin ETF options. We have them included in the expiration on Friday. And so it may be, as we get to the end of the week, we could see the price kind of pinned in this range that we are, although testing the lows of, we are really still in. So that's where we are as we head into the open. If we let's talk about technically why we might find some support here. When I look at where we are on the NASDAQ, for example, here we have pulled back to the weekly 20 moving average, which quite often, when you pull back to it in a trend, let's look at the previous trend we had following the 2020 sell-off. We had a lovely trend rally, and you can see each time when we were trending, pulling back to this weekly 20 moving average in the NASDAQ was really kind of an interesting support. Obviously, when it broke, it led to something bigger, and here we are testing this weekly 20 moving average today, start of the year, first time in 2025. If I go down to the daily, we could also argue that we have potentially made a little bit of an equal measured move here, depending on how you measure it. So I'm going to adjust it, don't worry, don't at me. So when I measure from this high to this low, you can see we're sitting on the equal measured move level. Sometimes when you see price action like this swing inside of it, it could be that what we have done here is a little bit of A, B, C. So it's possible, therefore, that we could fall a little bit further, like a false breakdown in this NASDAQ. 20,477 may be that equal measured move if we don't hold this 20,692. The thing about options expiration and the market makers is that they will kind of try and keep it in a price range if they can. And if they can't, what happens is you can see quite volatile moves. So we could see potentially quite volatile moves this week, especially later in the week as we get closer to the end of the week, because they're all hedged. They need it to stay at this range because this is where they don't lose money. And if the market starts moving, they're going to be selling it as well because it's to hedge. And so if we do see a nasty move lower, that it could actually get quite volatile. So we need to watch out for that. But at the moment, this I think is looking pretty decent, given that we've got this weekly 20 moving average here as well as a level, at least to attempt a bounce. And we could argue the same about the S&P, although I have to say that potentially the S&P has a little bit further to fall. So if we look at the S&P, we can see that we are underneath this weekly 20 moving average in the futures, and so we would need a little bit of a bounce, and we need to close back above and get back above last week's closing price and last week's low, and that would also be then a false breakdown underneath the lows of this range. If we look at it on the daily, this is what I mean. Here is the low that we made in November, and this high, and this is the low. Therefore, if this is just a Monday early shakeout, this is kind of the low that we really need to get back above. We could also argue, and this would put us back above that weekly 20 moving average with a tail. We could also argue, if we measure from this high to low, and we've done kind of one of those funky ABCs, we've got a little bit further to fall. But if I measure from here, so this is ABC, you can see we did try and bounce from the 61.8, and here we are at an equal measured move from that mid-December high at 5,820, and this was us going sideways into options expiration last month. Then we gapped higher, and here is our big bearish reversal. So potentially a bounce level. It certainly looks better in the NASDAQ when we look at that. Well, there is no relief in bonds, however. When we look at the UK gilts, here we are, a very, very nasty breakdown underway at the moment. And I really do think big picture, if I go back to a monthly chart in, this is the UK 10-year gilt. We really tried to, I use these fib extensions, so I'm going from '07 highs to the, from the '07 lows to the highs that we made in 2020. I feel like this, we've lost pretty important support here, and I feel like we've got much, much further to fall. I'm not sure what the UK government are going to do to fix, the problems that we have, particularly with growth. But unless we fix our problems in the energy market, I really don't see any of the things that they are trying to do going to be able to work. This announcement today about AI and data centers, they're hugely and they consume a huge amount of electricity, and we have the most expensive electricity in the world. It is 4 times higher than US companies pay for electricity. So I just don't see how anyone is going to invest in AI or data centers or pretty much anything that takes energy. This is why we're losing our steel industry, because our electricity is too high. So yeah, I think that we could see a little bit of a crisis in the UK. And the last time this happened in UK bonds, it kind of was a little bit infectious. It kind of spread. We could see the same in US bonds, and it could see a little bit of a nasty shakeout. But for now, it's Mutual Fund Monday, it's options expiration week. Although there was some pretty nasty price action, and we have had a pretty nasty correction to start the year. This week of all, I think, is where we may see a little bit of the bounce. Even in the Dow Jones is looking really scotchy here, isn't it? Here we again underneath the 20 moving average, but we're approaching this previous swing low. I think that this potentially could be a reason where we try and find some support. For me, the best looking of these is definitely the NASDAQ. So let's talk about gold and silver, because at the moment, big picture, I'm going to do the technicals mainly on gold, because I think the technicals, silver's a little bit of a twisted sister of gold, and the technicals aren't always quite as sharp or clear. Big picture, when I look at gold and this big swing higher that we've made, for me, when I look at previous swings, they've been really clearly 5 waves. And when I look at this swing that we have made from the October low here, we go back to the October 2022 low. If we count from here, you can see 1, 2, 3, 4, 5. Lovely 3-wave correction. And then from the low that we made in October 2023, we went 1, 2, 3, 4, 5. So here we are. This is now, instead of being an October low, we've got an October high. So if we're going to keep continuing, this is a wave 4. I expect this to be a corrective pattern, and then a final wave 5 higher. Everything kind of measures up for that. The problem with this is that this is quite a simple 3-wave correction, and so when you see a simple 3 in that position, quite often the wave 4 will be sideways. It'll be a wedge or a triangle, and it might be 5 waves within it. And so really this kind of needs time for me to set up. I still say really bullish, and we could just go sideways riding this weekly 20 moving average, which we are hoping the NASDAQ tries to bounce from today. We've done it really very nicely since November, every time we've pulled back and testing it. So I think if we were to, in gold, close underneath this weekly 20 moving average, which has moved up now to 2,617, that we may get another leg lower back down to the weekly 50, and potentially the 2,400 area is the where I'd really like to see gold hold support. It's the highs from April 2024 and July. It was the kind of summer highs, and it's just kind of one of those fib levels, and that weekly 50 moving average is a big deal. You can see previously it's been pretty interesting support and resistance in gold as well. So sideways correction. I don't think at the moment that I see a good entry here for gold at the moment. I think we kind of need to reset and are not quite there yet. Doesn't mean we won't bounce, but I don't kind of see a long entry. And I'm always looking, for example, what we've had 3 waves down here, so this is all corrective, 3 waves up, and I think that this is our first swing, second swing, and now we're going to see a third swing lower unless we move higher from here. And if I'm going to go back to the weekly in gold, because the wave 4 often has a relationship to wave 2. Wave 2 and 4 have a relationship, either time or price. And so if we measure what wave 2 looked like, you can see that if we in fact correct in price and time, that would bring us back to this 2,446 level that I was talking about, and this weekly 50, in fact, probably put us underneath it. But if we look at it in terms of time from this high to this low, this takes us to the end of March exactly. So that would mean that the first quarter is likely to be sideways and corrective in gold. And when you look at on the monthly chart at how this really kind of extreme rally that we've had, if we don't see a correction, we really are kind of due a couple of months of sideways to let all of these moving averages catch up and reset and give us a little bit of a spring to launch from before we do a next leg higher. So I'm still bullish this one, but I think that this first quarter I'm not looking for long entries. I kind of would like to see gold reset, and quite often, you know, if we get a nasty shakeout, gold will shake out with it. And so I'm feeling kind of similarly therefore about silver. If we look at where we are with silver, let's start with the monthly. Let's take all my scribbles off. Again, as I said, I think the technicals quite often are messy, unfortunately, in silver, but I'm counting from the low in September 22 as a wave 1, this is wave 2, and here this wave 3 here, I think this is mainly because of its relationship to wave 1 and because I can count 5 waves. And so, you know, for me, the most common retrace would be back to the bottom of this wave 4, or at least back to the weekly moving averages, which we're sitting on. And I would like to see a 3-wave correction in this one. At the moment, we're trapped in between these moving averages. So I do think if we were to do, again, the same thing, how long did this wave, let's be generous, with this wave 2, wave 4, again, this takes us to middle of March, and if we measure from that first high in this correction, you know, I just think we are not quite, you know, I'm pretty neutral at the moment, silver. I don't see a entry at the moment, and holding underneath this daily weekly 20 and in between these moving averages say to me that we are just unfortunately a little bit sideways here. I've been watching this to see if we broke out from this trend line. In fact, we got just a third touch, couldn't get above it. And if I look at it on the daily, all of our moving averages are bunched up and going flat, which means no trend and need a better pattern. So breaking above this daily 50 would be a good sign, and holding above it for another leg higher. But for now, I've kind of put that one on the back burner, and I'm trading carefully this first quarter. I think that we need to go pretty carefully. So what about in FX? Let's talk about the pound first, because the pound has had these really ugly moves. I actually think that the pound weakening is really helping the government. Now, as you know, I look at fib retraces and I look at fib retrace patterns. And if we go back to the high in the pound that we made here in May 2021 and look at the reactions on these fib retrace levels, let's move all this out of the way. You can see that this 236 fib, this is a weekly chart. This was really interesting resistance for a month, and then when we got above it, it became support. Likewise, with this 38.2 and this 50%, we bounced sharply off it, and we double bottomed on this 38.2 fib. So then this 50% became support when we got above it. This 61.8 was typically messy, and so these fib levels have worked very well. When we retested it was a little bit more sharp, but that thing about that 61.8 and the 50% then becoming support, it was. So here we reversed to a 786 fib. So if you apply these fib pattern rules, for me, if you reverse to the 786 and you hold underneath the 61.8, which we did here, we got underneath it and it became resistance, then your minimum first target is usually this 38.2. Sometimes you go further and you could come, in fact, we could come all the way down here, but this is our first target, 118. And you can see we've got pretty good support and resistance if we look left here at these lows here on the weekly. So the pound, unfortunately, based on fib patterns, which for me are pretty reliable, has further to fall, and 118, 1.184 is the next support in this, and we are 121, 1.21 at the moment, so not quite there yet. Doesn't mean that we won't bounce, and we're not going to drop like a rock in a straight line. And if we do bounce, then the resistance is going to be this 50%, which now becomes a little bit of a pivot level. And if we go left, you can see it's been a pivot level for some time. So 1.23 is key resistance. A daily or weekly close above that would point to the bottom being in and more upside. But for now, I think we can continue lower. And if we do the same measured move exercise here, this is our first swing lower in the pound, and we measure it from this high here, you can see that also, this 38.2 would also be an equal measured move from the high in September of 2024 for the pound. So further to fall, unfortunately, still going to be selling bounces in this one. And that's kind of quite true across the board, which is why I don't think the dollar is done. For example, the dollar Canadian, of course, this is underneath the threat of Trump tariffs. This one, big picture, when I look at the monthly, God, I feel like I've been trading this for such a long time, but some of my best trades, were on this chart back in the day. Now, if I put big picture, fib retrace levels from the highs in 02 to the lows that we made here just before the credit crunch in 07, and I put my fibs on from this high to low, this first swing to this 50% makes me think that we are making a big 5-wave bat pattern here, which would mean that our reversal target, or where I think this tops out, is all the way up here at 1.53, between 1.532 and 1.537. One thing about bat patterns is when we get up, if we do get up here, they reverse very sharply, turn very sharply. So that's one of those levels where I would put an alarm on. Like you can do that in TradingView, sends it to your phone even when your price gets up there. Now we're not going to get there in the straight line, and of course we've got this previous double top here at 1.46. So the dollar, which I think we've kind of got a date with. I think that we are potentially in a wave 5, and we've just done wave 3 of 5. Why do I think that? Because when I look at what we've done this is a textbook from the high in October 2022, a 3-wave correction. Then here's our wave 1, 2, and I think we're working on wave 3. And because we've got above these previous highs and this previous closing price here, I think any pullback, if we're going to get an opportunity to buy the dollar against the Canadian, we shouldn't go back below 140. So I'm buying dips, looking for 1.465 next, but big picture, I don't think this tops out until we get all the way up here to 153. And quite a lot of these commodity currencies, very similar thing going on. For example, here when I look at the Kiwi dollar on the monthly big picture, it looks like we are testing these lows here, doesn't it? Quite often third touch you would expect a false breakdown, but if we drop like a rock, then this trend line isn't valid and we're not going to stay within it. And again, if I draw from my fib levels from the 2000 lows all the way to the highs here that we made in 2011 in this one, these fib levels have worked really well. This was a lovely big bounce from the 50%, lovely big bounce from the 61.8 up to the 38.2, and then this 50% level in the middle became a pivot. And so it looks to me like we are breaking down in this Kiwi. And our next support is going to be a retest of these lows here in this 786 fib. In fact, because this looks like a big ABC, this would be my first target, and that's down at 0.49. So I feel like we're on the verge of breaking down here and have further to fall. And this is all to do, I think, with Trump policies and the tariffs, the potential tariffs. So maybe we see a bounce here. If we do in this Kiwi, then this back test of this 61.8 fib now underneath it is what we would need to get above to confirm actually that we haven't. So that we've bottomed and we're not falling further, and we're still staying in this kind of sideways range, and that comes in at 0.57. So if I go down to the daily and look at this, you can see we're just kind of grinding lower, and this price action, you know, when you spike down to a level you watch, it quite often you'll get a reversal, but when you grind, sometimes it just keeps going. So that's what I'm looking at in the Kiwi dollar. In fact, I would say, you know, as long as we stand underneath this daily 20 and these previous swing highs, I think, you know, bounces are going to get sold and we continue lower in the dollar in this one. The Aussie dollar is more likely, I think, potentially a bounce level, which would line up with stocks this week. And if we look at the monthly chart here, big picture of this Aussie dollar, you can see that we did a big ABC, I think, or a big three-wave equal measured move from the low in 01 to the high that we made in 2011. In this one, we reached the 786 and had another bounce. This one, I have to say, I think I'm a little bit more bullish on. The Aussie dollar actually really likes the 886, and this is one of those ones where, in fact, on this final swing, we swung down to this 886 fib level. When you reverse at an 886 fib and you get above the 786, your first target is the 50%. And we did this textbook. This, I think, potentially could be setting up another swing higher. So we do a big 1, 2, 3. And this is a potential support level at 0.61. I'm looking for a lower time frame reversal of this level. If we break underneath it, I think we come all the way down and potentially test this 886 again. So this Aussie is very correlated with stock indexes. And when I look at this on, you know, lower time frames, we really are having a go at finding support around here. If we look at it on the hourly, I think we may, you know, if you wanted to trade against the dollar or buy something against the dollar, the Aussie at the moment looks, for me, one of the better set ones. So that's how I'm seeing indexes and the FX as we head into the open. You know, the euro is also on a potential support level. I had looked at this initially to see if we would hold this an equal measured move level. So I measured from the high that in 2023 to the low here at the October 2023, and I was looking at this as an equal measured move support. We had a very nice bounce off it, but not enough to confirm it by getting back above these fib levels. The fib levels I'm talking about, again, come from this swing. We go from the high in 2020 to the low in 2022, and we bounced to 61.8. We've done a bigger move now, back down to the 236 fib. This is one of those patterns where if you can reverse here, we might see a move back to the middle of this range, perhaps not all the way up. This is based on the projection if we do a bigger 1, 2, 3. So the Aussie and the Euro both are at maybe reversal levels. The pound and the Kiwi, unfortunately, and the Canadian, say the charts say to me that they have got further to go. Now, if we continue lower, obviously I'm wrong, and this is not the bullish reversal level that we're looking at, and potentially, you know, we could see new lows in this euro. There's no guarantee. This is just, I think, potentially one of those bounce levels where we see if this turns into something bigger. And if we look on the lower time frames, Yeah, we haven't even flipped our hourly moving averages yet, but just one of those levels where those are the two of them where I think we may see a bigger reversal. So that means that, you know, potentially the euro against the pound has further to rally. And if we look at the euro against the pound, if we think this is in better shape, let's go to the monthly first off. Big picture then on the monthly. This is a pretty kind of interesting support range. I'm going to take this away. We've got monthly moving averages all flat and bunched up, and I think one of the biggest reasons for that is, to be honest, all of the economies in Europe are doing really badly because of energy prices and recessions. And so although we're kind of in a pretty interesting support range, underneath all of these monthly moving averages mean, just like we did when we did this in 2015, we need to get back above them if we're going higher. And so the euro against the pound is bouncing in a downtrend and got a little bit further to go higher before we hit resistance. And if we take just this most recent swing that we are in, let's measure the legs of this swing. So if we measure this first swing, low to high, this is pretty interesting because this is an equal measured move. So potentially the euro could bottom against the pound here. We've done a pretty sharp textbook reversal. And for me, the confirmation that you've done that is when you back test this 61.8 level, which is a 0.852. Gosh, this is not good news for the pound at all, is it? So back above 0.852 would be a bullish reversal in this pattern. And then again, because we've done that three-wave equal measured move, the most common retrace is a 786 fib, which would give us a target all the way up here at 0.905. Gosh, hard for the pound, isn't it? So yeah, there's a lot of bumpy resistance here, but if we get above it, then yeah, we could see some rocky times ahead for the pound, I think. Okay, I hope that's useful. I'll be back with a crypto update.